As the U.S. markets are currently closed, Rigetti Computing, trading under the ticker RGTI on the NASDAQ, closed the last session on October 7, 2025 at $43.90, marking a significant gain of $2.19 or 5.24%. After hours, it tacked on another 35 cents, a 0.79% increase to land at $44.24. Now, the immediate expectation is that this surge is just another wave in the quantum computing hype that has gripped the market. But the reality is far more intricate and points to a fundamental shift in the company's trajectory that the surface-level narrative is missing. The volume on this stock was staggering, hitting over 174 million shares, nearly triple its average volume. This isn't just retail speculation. This is institutional money making a decisive move. And the reason isn't just a broad bet on quantum. It's a calculated response to specific, tangible developments within Rigetti that suggest it may be pulling ahead of its rivals in a key, often overlooked aspect of the quantum race. The common belief surrounding Rigetti, and the quantum sector as a whole, is that it's a long-term, almost theoretical investment. Investors have been conditioned to see these companies as research labs burning through cash with the distant promise of one day building a functional, commercially viable quantum computer. The expectation is a slow, arduous climb, punctuated by minor scientific announcements. However, the reality we're witnessing is a sudden and aggressive repricing based on near-term commercial viability. Recent purchase orders for its Novera quantum processing units, QPUs, and a significant contract with the Air Force Research Laboratory, AFRL, are not just another set of press releases. They represent a critical transition from a purely research and development-focused firm to a company with tangible products, orders, and a growing government-backed revenue stream. The market is waking up to the fact that Rigetti isn't just selling a dream, it's starting to sell machines. Let's dissect the recent stock movement. The surge didn't happen in a vacuum. It's the culmination of a month-long rally that has seen the stock climb over 180%. The initial catalyst was the $5.8 million AFRL contract to advance quantum networking. This wasn't just another government grant. This deal, focused on superconducting quantum networking, signaled deep government confidence in Rigetti's specific technological approach. For those managing their portfolios on platforms like Fidelity or Interactive Brokers, this news should have been a major flag. It suggests a strategic alignment with national security interests, which often translates into sustained, long-term funding and collaboration. The market's reaction was initially strong, but has since compounded, driven by subsequent announcements of commercial QPU sales. This indicates that the expectation of future government support is now being met with the reality of current commercial traction. The stock's 52-week range, stretching from a mere 73 cents to over $46, illustrates a classic case of a company moving from speculative obscurity to a recognized player. Many retail investors using platforms like Robinhood or SoFi Invest likely contributed to this momentum, but the sheer volume points to larger players taking notice and building positions. Now, let's briefly touch on what Rigetti actually does. At its core, Rigetti Computing is a vertically integrated quantum computing company. This means it designs and manufactures its own quantum chips, integrates them into systems, and develops the software that allows users to access and program these powerful machines. Their approach is based on superconducting qubits, which is one of the leading technologies in the quantum race, also pursued by giants like Google and IBM. The key differentiator, and what the recent news flow highlights, is Rigetti's push to not just build bigger quantum computers, but to build practical, modular systems, the Novera QPU, that can be sold and integrated into existing high-performance computing centers. This is a crucial distinction. While some competitors focus on building a single monolithic quantum computer accessible only through the cloud, Rigetti is creating a hardware ecosystem. This is a reality that market expectations are only now beginning to grasp. The company's financial reports still show significant losses, with a net income of minus $164 million on revenue of roughly $8 million in the trailing 12 months. This is the part that gives many investors pause, especially those new to online investing. But framing this as a simple cash burn is a mistake. The relevant metric here is the conversion of that spending into tangible, sellable technology, and that's precisely what we're starting to see. Looking ahead, the future outlook presents a fascinating tension between immense potential and significant risk. The primary catalyst is the continued commercialization of their QPU technology. If Rigetti can demonstrate that its Novera systems can be successfully deployed and utilized by customers for real-world problem-solving, even on a small scale, the revenue picture could change dramatically. This would provide a tangible valuation metric beyond the theoretical promise of future quantum breakthroughs, a welcome sight for those utilizing investment help services like Schwab Intelligent Portfolios. The partnership with Nvidia to integrate quantum systems with high-performance computing clusters is another major factor. This isn't just a headline-grabbing collaboration. It's a practical step toward creating hybrid quantum classical systems that can tackle complex problems sooner than a purely quantum solution might. This reality of a hybrid approach may actually outpace the market's expectation of a sudden, purely quantum disruption. For those looking at various investing sites, the focus should be on tracking the adoption rate of these hybrid systems and any new orders for Rigetti's hardware. However, the risks are just as substantial. The quantum computing field is notoriously difficult, and scientific setbacks are always a possibility. A competitor could announce a significant technological leap that renders Rigetti's approach less viable. The company also faces the constant need for capital to fund its intensive R&D. While recent cash and short-term investments have grown substantially, continued losses will necessitate future financing, which could lead to dilution for existing shareholders. It's a high-stakes environment where a single breakthrough or setback can cause massive swings in valuation. The current strong buy analyst consensus is encouraging, but it's important to note the wide range in price targets, which underscores the inherent uncertainty. Here's a question for everyone watching. Do you believe the biggest risk for Rigetti is technological failure or the financial pressure of competing with trillion-dollar tech giants? Comment below with your thoughts. This is a critical consideration for anyone thinking about opening an individual brokerage account to invest in this sector. In summary, the narrative around Rigetti Computing is rapidly shifting. The market's long-held expectation of it being a distant, speculative R&D play is colliding with the emerging reality of a company securing major government contracts and making its first commercial hardware sales. The explosive price action and massive trading volume are not just hype. They are the market re-evaluating the company's timeline to commercialization. While the financial statements still reflect a company in its early stages, the operational milestones suggest an acceleration that was not priced in a few months ago. The tension now lies between this new momentum and the formidable scientific and competitive challenges that remain. The reality is that Rigetti has established itself as a serious contender, not just in the lab, but in the marketplace. The expectation of a far-off quantum future is being replaced by the reality of a tangible quantum present, and for investors, that changes everything. The content shared here is for educational purposes only and should not be considered financial advice. Always consult with a qualified financial advisor before making any investment decisions. If you found this helpful, please like, comment, and share to support the community.